Most people hear about Iran's economy and think about oil, sanctions, or a collapsing currency. But underneath those headlines are two powerful systems that shaped everything: bonyads and multiple exchange rates. To understand why Iran's economy struggles today, we need to understand these two systems and how they changed the incentives inside the country. Let's start in 1979. After the Islamic Revolution, the new government created organizations called Bonyads. These were religious and charitable foundations. Their original purpose sounded noble: help the poor, support families of war veterans, and redistribute wealth after the revolution. But over time, something changed. Instead of staying small charities, many bonyads grew into giant business empires. Today, they are believed to control around 20% or more of Iran's economy. They own companies in agriculture, construction, manufacturing, shipping, banking, telecommunications, almost every major sector. And here's the key difference: they don't operate like normal businesses. Many bonyads do not pay taxes. They are not publicly audited. They don't answer to parliament. They report mainly to the supreme leader's office. That gives them enormous advantages over private companies. For example, Bonyad Prawan Basij, linked to the Basij militia, operates like a huge conglomerate. It has interests in mining, metals, banking, and automotive industries. Let's move to the second system: exchange rates. Every country has a currency. Iran's currency is the rial. Normally, a country has one exchange rate, one price for its currency compared to the US dollar. But Iran didn't. For many years, Iran used multiple exchange rates. That means the dollar had different prices depending on who you were and what you were buying. For example, some essential imports like medicine could use a subsidized rate of about 285,000 rials per dollar. Other goods might use a semi-official rate. Meanwhile, the free market rate could be over 1,400,000 rials per dollar. That's an enormous gap. Why does that matter? Because whenever there's a gap between an official cheap price and a higher market price, people try to exploit it. For instance, at one point, each Iranian citizen could legally buy a limited amount of dollars at the cheaper government rate. Then they could resell those dollars on the open market at a higher price. They made profit simply by flipping currency, not by producing goods, not by building companies, just by exploiting the difference. This is called arbitrage.